successful, as bad as you want to breathe, then you'll be successful. I'm here to tell you, number one, that most of you say you want to be successful, but you don't want it bad. You just kind of want it. You don't want it bad as you want to party. You don't want it as much as you want to be cool. Most of you don't want success as much as you want to sleep. Some of you want to sleep, some of you want success. And I'm here to tell you today, if you're going to be successful, you got to be willing to give up sleep. Successful, as bad as you want to breathe, then you'll be successful. I'm here to tell you, number one, that most of you say you want to be successful, but you don't want it bad. You just kind of want it. You don't want it bad as you want to party. You don't want it as much as you want to be cool. Most of you don't want success as much as you want to sleep. Some of you want to sleep, some of you want success. I'm here to tell you today, if you're going to be successful, you gotta be willing to give up sleep. Don't go to sleep until you succeed. Don't sleep. Don't quit. You already get paid. You already learned. Get the wrong from. Give up. Keep going. Don't go to sleep until you succeed.
What is going on, guys? Go ahead and drop a 1 in the chat if you can hear me. Awesome, awesome. What's going on, guys? Welcome to today's class. Let me go ahead and get situated real quick. Perfect, perfect. So I appreciate y'all hopping on. Let me turn the music down a little bit. All right, bet. How's everyone doing tonight? Go ahead and drop a 2 in the chat if you guys are doing good. Awesome. Well, I appreciate you guys hopping on. I know it's a holiday week, and we still wanted to bring the knowledge over. We are a little light on our schedule, guys, but we did want to bring as much knowledge as we can. We met a few more people, right? Even through these, slow weeks of the market, okay, and the holidays, okay. So, without further ado, like I said before, guys, today my topic is going to be liquidity, smart money concepts, and different point of interest, which all really just ties in together, right? And I'll be going over those charts that I marked up yesterday that actually hit, and I didn't trade any of them, or I didn't trade it all yesterday. Okay, but without further ado, let's go ahead and get into it. Okay, I'm going to share my screen. Go ahead and drop a 3 if you can see my screen. Perfect. All right. Let me pull up, one sec, guys. Okay, perfect. All right, guys. So again, today I'm gonna be going over smart money concepts, right? I know a lot of my classes have been over Wyckoff schematics, right? Because that is predominantly what I like to look for when I trade. Like that's probably the first thing I look for. And I would say I personally look for that more than any other educator, right? I know James, Mustafa, Garrison, they all trade it. However, I feel like that's something that I focus on when I look to trade. Okay, and they're more about just smart money concepts in general. Okay, which we're gonna go over tonight. Okay, so before I get started and show some examples of how we look at this, who can tell me what smart money is, right? Like what drives smart money? Like what is the driving force behind smart money? That may be kind of a generic question, but who can tell me that? Take some guesses. If you don't know, go ahead and take some guesses. All right, perfect. Liquidity. Trading like the banks. Yeah, so smart money is trading like the banks, but the answer I was looking for, the driving force is liquidity. Perfect answer, right? So who can tell me what liquidity is, right? I'm looking for one word. Pull this up. Full of money, right? Exactly, perfect. Liquidity is money, okay? That's all it is. So I don't want to get too much into like bank logic. I mean, I will a little bit, but essentially there is money in the markets and that's the way the markets move, right? The banks are going to go towards the money. Like you said, it's a pool of money, right? They're going to want to dive in that pool, okay? Whether it's above them or below them, that's where they're going to want to go. That's what's going to drive them to make those moves that they make, okay? But how do we see liquidity? How do we see money in the market? Like what are some signs that there's money sitting though where the banks are going to go? I'm going to go ahead and turn this. Yeah, so how can we see liquidity in charts, right? On TradingView, how do we see it? What are some signs? Equal highs and lows, perfect, right? What else? Looking for 2 more answers. Well, equal highs and lows, it also equals out to support and resistance, right? Support and resistance. What's another way that we can look for? Liquidity void and order blocks we'll get into, but that's not necessarily signs of where liquidity is. Okay, those are, without a better term, breadcrumbs that the banks leave behind, right? Those are clues of where they're going to go next, but that's not necessarily the answer I'm looking for. Volume, trend lines, definitely not trend. Oh, actually, take that back. Trend lines, yes, perfect, right? The answer I was looking for mainly was retail patterns, right? Like flags, pennants, things like that, right? Head and shoulders, stuff that you can find on Google, right? If you Google Forex trading and you see that come up, that's most likely where liquidity is going to be. And the reason why is because the banks release that information for people, just anybody to learn, right? Why? Because they're trapping them, right? And why are they trapping them? Because now they let them play those, right? And the banks are like, okay, cool. Like they found this pattern or we made this pattern. People are putting in, buys and sells depending on which pattern it is. And they're going to go against it. That's how they're going to make their money. Okay. So right now on the chart, I have equal highs and equal lows, right? We have consolidation, right? Price in 2 sets. Okay. I'm going to go ahead and type this out real quick. Oh, sorry guys. Cool. We got sells up here. We got buys. Right. The top is going to be a sell example, and well, yeah. Move this a little bit. I'm going to make these a little bit bigger. Okay, perfect. Okay. So right now, like I said, we have consolidation. Okay, this is when the market is moving sideways. Okay, let's go ahead and extend this line, right? Let's say the market came up something like this. Okay, and let's say it came like this. Okay, so right now within these two examples, where is the liquidity? Where's the money? Above and below. Perfect, right? I like to use this little caution sign. Okay, this is how I dictate that where my liquidity sits. Okay. Okay, perfect, right? Why? Why is there money sitting there? Why is there liquidity? Well, the reason why is because if I'm a retail trader, right, someone who's not studied at all, just saw those patterns, I'm looking at this as like, okay, this is my resistance level and this is my support level. Okay, every time price pushes up here, it's going to bounce off. Every time price pushes down here, it's going to bounce off, right? So price is going to sell from here and buy from here. Okay, and once they see this happen multiple times, like it did here, right, it hit 1, 2, 3 times, right, and at the bottom 1, 2, 3. Once they start seeing stuff like that, that denotes, let's say price is live right here, that denotes a triple top, triple bottom, right? People are seeing that, they're like, oh wow, like price is not breaking that level. Okay, once price pushes back up, what are they expecting? Price to sell, right? They expect price to continue, and I would say maybe 60% of the time it is going to start selling. Why is it going to do that? The reason it's going to do that is because the banks are going to start putting them in profit, right? So like, let's say they sell right here, boom. Now they're down here, price is in profit, okay? Let's say retail traders, let me go ahead and, cool. Okay. So right now, retail traders are selling. So their entry is going to be, let's say right here, based on spread. We're going to put green for their entry, and then stop loss is going to be right here. Use that red. Okay. This is going to be what a retail trader is typically thinking, right? Okay, just hit my resistance level, I'm going to sell. Stop loss is going to be a little bit above the highs to give it some breathing room. Okay, so right now they're in profit. Okay, price is pushing down nicely. They're like, okay, cool, like, you know, it's working. And right after this, what happens? Who can tell me what happens right after price, like, let's say stops right here? Shoots up, perfect. Boom, price will do something like this, okay? Now, why is that? Again, because this is a retail pattern, right? This is something that you could find on Google, right? This is support and resistance, right? People like to trade break and retest. What happens is price starts pushing people who sold in profit and price shoots up. Boom, okay? Not only is it taking out the sellers, but now let's think about other people that trade, you know, again, break and retest. Once price breaks out of this, they want to buy. So a lot of people put buy stops right here, okay? Price shoots up, they're like, okay, boom, I'm activated, okay? My stop loss is down here just because, you know, if price shoots up, it could come back and retest and boom, okay? So price shoots up, took out the sellers, right? The driving force behind this move is the banks, like someone said earlier, right? This is the banks knowing that, hey, okay, people sold, let's go ahead and shoot up. Boom, they shoot up. Now they activate buyers as well. So they took out all the sellers, they cashed out that money, okay? This move shoots up, boom, they activate the buyers. Buyers are like, cool, I'm in profit. And then what happens right after this? Usually. Shoots down, perfect. Price will usually do something like this. Okay, boom. So now what happens? Okay, they already took out the sellers, they cashed out that money, they hit their stop losses. Here they come up, they also activated buyers, right? Buy stops and just people who wanted to buy. Let's say first price came back down to here. more people are buying because they're trying to trade break and retest. So once price reaches here, they expect price to tap here and then continue up. Okay. However, price just continues down and boom, breaks through. So now they took out sellers and then they came down and took out buyers. So boom, that's how the banks trap retail traders. Okay. Before I move on, does that make sense? Drop a 5 in the chat if that makes sense. Perfect, right? So again, they shoot up, they take out the sellers, come down, take out the buyers. Boom, they cashed out the money. Guys, that is smart money. That is what that means. Now, it's not always going to look picture perfect just like this, okay? Like I'll show you an example where it's not really like equal highs and equal lows. It's just one low, but you could tell there was liquidity sitting there, and I'll go over it. But right now, I want to get at is like this is the generic version of smart money, right? So we have those equal highs, price is going to go into that liquidity, capture it, right? Take out the sellers, come down, take out the buyers. And that's what the banks are doing all day, right? Whenever they trade. That's how, you know, these big candles, that's where we get our order blocks and stuff, which we'll get into. But this is what the banks do, right? When they enter the market, it's going to be a driving force that's going to go where the money is, right? And capture and take out retail traders, okay? So they pushed up, took them out, and move down. Okay. Now let's think about it logically. Great. So that's what we see on the charts. Now let's think about it logically. Okay. Let's say I'm a bank. Okay. Let's say I'm Chase Bank. Right here, when I see this, I have to put money into the market to make it move. Right. So right here, to make this happen, I have to buy. Okay. And for my example, for my charts, my blue is profit, gray is drawdown. Okay. So right here at this point, right, I put in, let's say, millions of lot sizes, right? Let's just say 100 million lot sizes to push the market up real quick. Like, let's say we're on the hour chart, okay? All of these are, you know, let's say these are all moving down. These are like 8 hours total, right? So 8 hour candles, okay? Boom, 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 like all in here. And then right here, let's say this happens in 1 hour. Okay, this is typically a big, fast candle. Okay, one sec. Sorry, guys. There we go. Boom. It's typically one quick candle like that, and then price turns around. Okay. And so what happens, right? Thinking about it logically, the banks buy right here, and they push market up real quick, and then what do? They come right back and they sell. Boom. Okay. And again, blue is profit, gray is drawdown. Okay. So as soon as I bought, now I entered sells. Okay. And typically what happens is, let me go ahead and type this out right here. The banks will buy, or their buys are going to equal out to, let's say, 100 million lot sizes. Or let's just say lots. Okay. The sells, which I just entered now, is typically going to be something like 900 million lots. Okay. So if I have 100 million in buys and 900 million in sells, which way is the market going to go? Up or down? Down. Perfect, right? That's just, you know, that's just common sense, right? When you think about numbers, right? 9's bigger than 1. Okay. So when price pushes up, right, they entered a lot of sells, market's moving down. Great. Okay. So now as traders, how do we trade this? Okay. Now there is times where you can come and try to catch this entry, which I'll go over. But let's say you weren't able to see this move, right? And price came down. What are we waiting for us to jump in the trade? Who can tell me? The test, right? If we're talking about Wyckoff, perfect. But you know, just I'm looking for a specific word that starts with an M. Let's see who knows it from the boot camps. Mitigation, perfect. Great answer. There you go. Perfect, right? What does mitigation mean? Mitigation means, in a sense, break even. Okay. So if we see price did this, right? I bought, let's say I'm a bank again, and I bought price right here. Okay. Price shot up and then I sold it. Okay. Boom. Price is live right here, right where I have this, you know, the end of this line. Okay. If I'm looking at my buys and sells, my sells are in profit, right? Where are my buys? My buys are in drawdown, right? And if you didn't know this, guys, the banks control the market. Okay, they will never lose because they have the capital to put in this type of money to make these moves, right? So if they never lose, right, and their buys are in drawdown, I'm gonna go ahead and delete this just for now, right? Their buys are in drawdown. Where does the market have to go for them not to lose? Back up. Perfect. To do what? Mitigate. Perfect. Thank you guys. Right. Perfect. Right. So I'm going to bring back the sell. Okay. So what that means is I'm going to use the red brush now to show this. Price will typically do something like this. They start coming up choppily or whatever. Tap maybe even right here, maybe a quick little wick, and then price will drop. Okay. Why? Oh shoot. Okay. Why? Well, because look, we're selling, right? Our sells are in profit. Price pushes back up here, and what does it do? Excuse me. Price pushed above. So let me do this. Okay. I'm gonna grab an orange line. Okay. That's where I bought price. Okay. See how price came back up and literally just went above it just a tad and then dropped? That's mitigation, right? That means price came above where we bought. So now our buys are no longer in drawdown. They're either at break even or a little bit in profit. And right there, the banks close, and sometimes they'll even enter more sells. Right? Boom. So they'll do stuff like this. Let's say they add, another 300 million lots, whatever. And now the market's going to be tanking because they just closed out their buys, right? And again, I just said the banks don't lose. Okay. Are the banks in drawdown anywhere right now? No, right? Because they closed out those buys, right? They came up, they bought right here, pushed up, they sold, right? Price came back up, they closed out their buys and they sold again, or they just closed out their buys. Okay. But that's essentially the idea behind smart money. Okay. Does that make sense? Drop a 7 in the chat if you're following along. Perfect. Okay, guys, this is the concept behind the way we trade. Okay. And I want to put this out there because this is where people get confused. Smart money is not a strategy. It's not a methodology. It's a concept. Okay. You got to think like this. This is why bank logic is so important. This is why James does it like every week or every other week, because you have to understand this idea to understand smart money, because that's exactly what this is, right? This is smart money. This is the concept behind it. Okay. Because it's not always going to look picture perfect like this. It's not a pattern. Okay. It's going to be, you have to think about it logically, right? If I was a bank right now and I just made this move, okay, where do I have to go to not lose? Okay. They got to come back up, mitigate. And if you guys, my more experienced traders, what would you call this? Oh, let me go ahead and, my fault about that. What would you call this area? Are we selling because of breaking structure by taking the bottom side liquidity? I'll get into that. That's a perfect point though. UTAD, it could be the UTAD, but what's these, how do I explain this? What's the point of interest that we would call this, which we're actually going to get into as well? Liquidity void, it could be a liquidity void, but what's within a liquidity void that makes a liquidity void valid? Starts with an O. Order block, perfect, right? This is what you would consider an order block, right? This would be one big green candle up, which is why I put it green, right? Or whatever color your guys' charts are, mine are blue and black, right? But let's say, generically, your green candle up, and then we start seeing, red candles down. This is gonna be that last push up before the move down, which we're gonna get into, okay? But essentially, this is your order block where price needs to come back, mitigate before dropping. Okay, does that make sense? Drop a 9 in the chat, that makes sense. Awesome, okay? And it's the same thing for sells, guys. I'm gonna go through this one kind of quick, okay? If you guys have questions, go ahead and ask. Right now is the time to ask. Okay, so essentially the same thing, right? We see double bottom, double top. Prices coming here. They're like, okay, let me go ahead and move it up a little bit. Bank or retail traders are like, okay, cool. I'm gonna start. Prices start buying, and it doesn't do this all the time, but I have noticed that it does this a lot. Where price will reach this level of support and start moving off, and then price will drop hard. Boom, and give us that typical spring, or not quote unquote, but sometimes it's a spring if we're talking about accumulation, which essentially this is what this is. Price will push up, come down. Actually, we'll stop right there, okay? Essentially, price will do something like this, right? So price will take out people that are trying to buy from this level, right? Let me go ahead and add this little orange line, okay? Boom. So people are buying from right here, price is in profit, and then boom, banks take them out because their stop losses are right here, okay? Also, people are also selling once price breaks through with their stop loss back here. Those lines are really close. I'm gonna make this green. Okay. So people are also selling with their stop loss around here because they're trading break and retest or the breakout. Price returns, you know, it may tap and do something like this. But then eventually it'll continue up. Boom. Okay. Boom. Something like that, right? Price will drop, push up, maybe come back a little bit, boom. Like, okay, they're in profit, boom. Then they come back and stop them out. Okay. Does that make sense? Could that have been a breaker as well? Yes, which we'll get into. Okay. Yes, I personally don't trade breakers too much, but technically yes. And I'll get into exactly what difference between a breaker and an order block is, okay? But essentially, what happens here, okay? Price is live here. Let's do it like this now. The banks sold right here. And then they bought right here. Okay, what do the banks got to do now? The price is live right here. Mitigate, perfect, come back down. Okay, so price will typically do something like this. Maybe make equal lows, come back, boom, boom, shoot up, okay? I know that's kind of messy, but you guys get the idea, right? They're coming back to where we put that sell position, which is right here. They cross through that entry point, right? Put them a little bit in profit or break even. They close out those sells. Oh, not the buys. They close out the sells, and boom, now the buys are in profit. They maybe enter more buys, and price moves up, okay? So once again, guys, that is the concept behind the bank's movement, right? That is the smart money moves, right? That's how we trade smart money, okay? So now I want to get into this real quick with a breaker and an order block, okay? So essentially, if we're looking at price, which we'll get into exactly, what these are, but essentially this would be an order block, right? Price gives us that last green candle push, price drops, we want to come play the open. However, actually, I'll leave that there. We'll do it like this, okay? This is also a breaker block. And if you guys have no idea what this is, don't worry, we're gonna go over what these are, okay? However, we're gonna have something like this probably as well. In this example, sometimes it doesn't create this little push down before that huge push up, okay? So this right here is, boom, a little down candle before the up move, okay? So essentially, you could technically call this also a breaker block. And the breaker block would be between here and between here, okay? Oh, it didn't give me one line. Okay, so between those two green lines, that's essentially your breaker block, and the same thing at the bottom, okay? So essentially, that's why I don't really look for breaker blocks, because usually they line up with an order block. So I'm rather gonna play the order block rather than the breaker block, okay? Does that make sense, whoever asked for that? You admit a few more people, but yeah, essentially, either way, price is still gonna, price is still gonna come back in this area before dropping, okay? Honestly, you could use that as another confluence for price to line up, okay? But does that make sense, guys? Go ahead and drop 9 in the chat if you're following along with me. Actually, drop a 1, apologize. Forgot what number we're on. Awesome. Any questions before I move on? What does confluence mean? Confluence means multiple confirmations, right? Which we'll get into, but essentially, right, we're not just trading off order blocks. We want to use the FIB. We want to use, let's see, like, breaker blocks, stuff like that. We want to use a lower time frame structure to help us look for multiple confirmations that this is a good area for an entry, right? So again, this is a breaker block and an order block, right? This is also a deep level on the pullback, right? Which we would use our FIB. They would line up with that. Also, if we go down a smaller time frame, like this is the hour, let's say we go to the 15 or the 5, there may be an imbalance sitting there too, right? That's multiple confirmations that price could come to here and give us a rejection. Okay, does that make sense? So confluence means multiple confirmations. Okay, cool. I'm gonna go ahead and start moving on, okay? So, again, that's the idea behind smart money, okay? So now I'm gonna go ahead and come to these, okay? I'm gonna make them pretty, okay, cool. These are our different points of interest that we look for, right? This is what gives us those confluence, right? So the things I just named, we're gonna go over these now, okay? So essentially, same thing. Let me go ahead and grab these real quick. Okay, perfect. Let me delete these lines. Cool. All right. I want you guys to study this and start thinking about these. If you've seen these in the market, if you guys are a more experienced trader, I want you to answer these questions. I'm gonna grab a water real quick. What guys think about this? Okay, 1 sec. Feel free to screenshot this. Okay, perfect, perfect. Okay, so now we're gonna get into this, and let me move this line a little bit up. Actually, we'll move it down and then I'll move it back up later. Okay, so essentially, who can tell me what this? If you guys know candle patterns, right? We're not talking about anything we've mentioned just yet. What's this type of candle pattern? If anyone knows, because this will be the easiest way to describe it from here on out. Big shadow. I don't think I've ever heard big shadow, so I can't tell you if you're right or not. The word I was looking for is engulfing. That's what I've learned it as. Okay. What it means is essentially we had a green candle that pushed up, and then we had the red candle that came down fully and actually engulfed it. It's a bigger candle. Okay. Essentially, this is going to be your perfect order block, or your perfect smart money candle, or your perfect institutional candle, your perfect FU candle, right? Those are all the names it goes by that I have learned. We stick with order blocks here in Empire. Sometimes you'll hear me say smart money candle, okay? But essentially, how this gets played is exactly what I just kind of went over, okay? So price will do something like this, create those equal highs and equal lows, or maybe just equal highs, right? Price will drop, come up, boom. Come up right into this candle, create that last green candle before the down move, right? That push up, and then we get that engulfing, and then we get price to drop. Perfect. Okay, something like this, right? So before this happens, what we mark up, right? When I send out, my trade ideas, at least for me speaking, I do this. Boom, equal highs, and I put my little caution sign, like, hey, there's liquidity sitting up here, right? This is a trap. That's why I put the caution sign, right? It's like, it's a trap. Don't sell from here, right? This is an area where the banks are going to bust through before possible sells. And this is what happens. Price pushes up, taps here, drops. Okay. So when we see this, right now, let's say price is live. How do we trade this? Who can tell me? First and foremost, are we looking for buys or sells? Perfect answer, Jason, but I kind of messed up. But yeah, perfect, sells, right? And just like you said, we're waiting for mitigation. Okay. Where is price going to mitigate? Now let me put I'm going to put 4 lines and we're going to do like a little quiz, essentially, okay? So there's going to be a green line. Blue line. Let's do pink. And let's do, sorry guys about the dogs. Let's do orange, right? So where is my point of interest, right? Where do I want price to pull back to? Like which color line do I want price to pull back to? Wait for retrace, perfect answer, but like which line exactly do I want price to pull back to? Like, where's my area of interest? I got a green, I got a pink, I got a purple, pink. Anyone else? Orange, pink. Okay. So typically, only a few of you do ideally blue since it's 50%. Okay, now we're getting technicals. I like you guys. You guys are more advanced. Okay. So essentially, there's two answers. Pink and blue, right? That's what we teach, right? Pink and blue. Green, it definitely can come up there. However, it most likely won't. Okay. And definitely not the orange. The orange is too low. Now, if there's an imbalance, we'll get into that, but we're not going to talk about that now. We're looking at the pink and the orange, right? So someone said it open to high 50%, right? So essentially what this means is we're looking at the open of the candle and the 50% of the candle, right? We're looking at the green candle. That's our order block. That's our institutional candle or FU candle, whatever you want to call it, okay? This right here, oh, let me get the arrow. This right here is our order block. This is our area of interest. This is the candle we're looking at, okay? And we're looking to play the open, which is where the pink line's at, and the 50% of the candle, right? Halfway of the candle is the blue. Those are our two areas of interest. Now, how do we know exactly which one it's going to play? Sometimes you don't. However, that's where we use confluence, okay? Now we go to smaller time frames, okay? Is there a smaller order block or something that lines up? Is there an imbalance, right? Which we'll get into, stuff like that. Fib levels, which ones line up, okay? But nonetheless, these are the two areas of interest, okay? So price could come up. And someone said ideally the 50%, and that's just because that's usually the last point that a price will actually go to. Sometimes it'll miss the 50% and just play the open though. That's why I like to play the open personally, okay? But the 50% is more safe. But nonetheless, right, the idea behind this is that price will come back to this candle, right? Or real quick, price will come back to this candle, mitigate, and then drop and continue falling, okay? Now, the reason behind this is what I went over, right? What do the banks do? Let's say right here, right at the pink line, what do the banks do when price is like right here where my mouse is at? Let me go ahead and use the little spotlight in case you guys can see that. Okay. What do the banks do right here? They activate buys, right? They buy in this case, right? They bought to create this candle and then afterwards they sold, okay? That's why price needs to come back up here because they need to mitigate that area where they bought. They need to close out those buys before dropping, okay? So that's what we're looking at, okay? So our confirmations that we're looking for sells here is one, the open of the candle or the 50%, but also two, if you guys know this, something called a break of structure, which we'll actually be going over tomorrow in our beginners class. But essentially, right, if you guys know, this is what's known as a break of structure, meaning that after an uptrend, let's say price was something like this, okay, price is pushing up, came down, boom, broke below the last low, right? So we're creating, higher low, higher low, higher low, price pushes up, comes down, creates a lower low, boom. That's our break of structure. That's an indication that price could drop lower, okay? So essentially, that's the confirmations we're looking for. We want price to come back, mitigate this candle, and then drop. Does that make sense? Drop a 2 in the chat if that makes sense. Actually, perfect. Feel free to screenshot this if you want real quick. Go ahead and actually type something out just real quick. So feel free to screenshot that real quick because I take a drink of water. Can a breakup structure also be price grabbing liquidity? It can. And so I'll go into that in another class, but it can, right? That really comes with essentially what Wyckoff is, right? So if you've seen the Wyckoff calls, go into that and look for essentially what a sign of weakness and a sign of strength are. That's exactly what those are, okay? So feel free to go check this out. But yes, essentially it can be, okay? So That's usually what happens on the sells. Okay. Same thing for the buys. And I'm gonna kind of run through the buy real quick before we get into the other types of candles. Okay. Okay, perfect. So now let me move this line up so I can do this. Okay. Same thing same exact thing happens here. Price will push down, it'll do something like this. Okay. Actually, let me redraw this because I want to draw a different type of example. Price will come like this. Okay. Who can tell me what this is exactly? I kind of want to make this candle bigger just to prove the emphasis behind it. I can do it. That's fine. Oh, real quick. When looking at a really small stop loss, how do you factor in spread when taking the entries price reaching the 50% level? You could put your entry. So let's real quick. Let me go back to this sell example. Let's say my point of interest is right there, the orange line. What you can do is you can put your entry a little bit lower, right? Just to take into account spread. Okay. If you want to be technical, you can actually calculate the spread and actually move it down exactly the amount. But essentially, my point of interest there is always like round down a little bit to like the next even number or something, right? Just to take that into account for spread. And same thing for the 50%, right? If my entry is actually here, maybe I'll move it down just a little bit lower. Okay. Does that make sense? Does that answer your question? And someone said bullish engulfing. Yes, it is. However, what I was looking for was this is also accumulation, right? Where we see selling climax, secondary test, selling climax, secondary test, secondary test phase B, spring, boom. Okay. So essentially what we're doing is we're creating equal lows all the way down. Right, there's a little low here. This is something I go into a video on my channel on the website. It's called accumulation in depth, right? This is something those are called liquidation runs, which you guys can look at those and watch the video and learn that. But essentially, price is coming down, capturing liquidity, right? They're taking that low out, taking those lows out, taking that low out, and then they finally create that last one. And typically, I'm gonna go ahead and extend these out because this is essentially what it looks like. Big candles, okay? I kind of drew this better. I should have drawn these bigger. But essentially, big candles, okay? This is how you know the banks are in. This is a good sign that you're right and that this is an order block because you'll see big candles like this. And let's say this is down here, okay? So price, again, we're looking at the open of the candle. Right now we're looking at the red candle because we're looking for buys, okay? So this is our order block, okay? And the 50%, those are our two areas of interest. So after price creates these candles, price will typically shoot up, give us that breaker structure, and then come down and do what? Mitigate, right? Either at the open or the 50%. Now, how do we tell? Again, you'll go down and use smaller time frame confirmations, but essentially, let's just say price did this, okay? Okay, does that make sense? Drop a 3 in the chat if that makes sense. Perfect. And so essentially what one of the major things I forgot was when we put our entries, let me go ahead and do the sell as well. Okay. Entries at the open or the 50%. When we put our position, I usually like my first take profit at the lows, right? Why? Because that's where money sits, right? Price needs to come and take those out. Okay. Boom. Price needs to come at least to these lows before continuing down. Okay, so that's always a good take profit. Who can tell me where your stop loss goes? If we're talking about just the sell example, where does your stop loss go? The close of the candle, you can. However, excuse me. However, the top of the candle, right? The top of the wick is the better and safer, right? To give it a little bit more breathing room. Okay, at least that's where I put it. Okay. Stop loss right there, right? And again, someone asked about spread. Sometimes you want to put this just a little bit higher because of spread, okay? But essentially, your stop loss is going to go above that. And why is that? Because if price pushes up higher than that, essentially you were wrong, right? That's not an order block. That's not where the banks bought, because if that's the case, the banks wouldn't have sold that hard, okay? So essentially that's where price goes. Actually, let's take that back. Whoever asked about could a breaking structure also be a liquidity grab, that's in the case where this comes in handy, right? So I don't want to confuse anybody. So if it does, just kind of forget this. But for the person that asked, essentially if price dropped here, broke structure, and then came back up, and instead of mitigating and falling, it just kept going, this little drop was the liquidity grab. And that's also where that break structure comes in. Okay. So yes, that's exactly how that would get played out. Okay. And typically that's a sign of weakness or sign of strength, but we'll go into that in another call. But that's essentially how that happens. Okay. Cool. So essentially, yeah. Entry is going to be at one of these two orange lines. Stop loss is going to be typically at the top of the wick. Okay. Same thing for the buys. Okay, let's say we put our entry right here, stop loss is here, boom, take profit here, something like this, okay? And obviously, we want a better risk to reward because it's not even a 1-to-1, that's horrible. But, you get the idea, right? And sometimes that's why the 50% is a better entry, right? Because it's going to be a deeper pullback for the banks, which is going to mean they're going to buy lower and sell higher, right? So if this is a deeper pullback, they're buying lower, meaning there's more chance for them to go, right? There's more space ahead of them for them to rise, if that makes sense, right? There's more pips to be moved. There we go. That's the word I was looking for. Sorry. Right, but essentially, yes. Right, so pullback, stop loss at the longest wick, right? Not just the order block, right? We see how this green candle, the red is the order block, but the green has the longer wick. I typically just put it at the longer wick of the pair, okay? So that'd be my stop loss, the longest wick, okay? So that's what we'd be looking for in order blocks and, engulfing candles, institutional candles, FU, okay? Does that make sense? Drop a 4 in the chat if that makes sense. Perfect, okay. And now the next things, okay, let me go ahead and do this. Oh, not that. Okay. Does anybody know what these are called? At least to me, what I call them. These type of patterns here in the middle. Anyone want to take a guess? There's 2 answers. Oh, perfect. Smart money cubes. That's what I call them. Sometimes they're known as rally-based rally or drop-based drop. But we're gonna go ahead and stick with smart money cubes. All right. I want to bring that term back because that's how I learned it. Smart money cubes, whatever you want to call them. But essentially, price is doing the exact same thing. However, this is an order block in a trend, okay? Meaning, let me go ahead and move this over here. Let's say price is pushing down, right? Trendy boom, 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 something like this, okay? If you see price, well, actually, let's do it like this. Let's say price was, pushing down, did something like this, push down, created that, boom, something like this, okay? Essentially what you're looking for is, let's say this is the 4 hour. If you go down to the 30-minute, you may see something like this over here, right? But we're saying on the higher time frames, essentially what you're looking at is for price to come up to this green candle and then drop, okay? And again, we're looking at the open and the 50%. Typically, it's a really small candle. It's a little cube, right? It's almost a perfect cube. If that's the case, I just play the open, right? I don't even look at the 50% as a possibility if it's a small candle, okay? I like to look for just the open. However, sometimes the 50% can get played and it's a better entry, okay? Now, typically, again, it's almost a perfect cube. Now, sometimes it's not, but nonetheless, it looks something like that, okay? But basically, the same thing happens. Price comes down, right? Price is downtrending, price pushes up, gives one green candle up, and then drops, okay? Why did price give that one green candle up, right? Well, essentially, again, something may come like this, and on a smaller time frame, you may see this kind of structure. But yeah, essentially, thinking about it logically to me and how I learned it, it's like, okay, if price is pushing down, why was there just one little push up before the move down? That's, to me, you know, thinking about it and how I learned it again, was the banks were pushing down. They needed to come back and either capture liquidity or mitigate something before continuing down. So if price starts coming back up and looks like a retracement, so it's looking like, you know, something like this is my area of interest, because, you know, if the banks created that candle, well, now they're coming back out to mitigate and then drop. Okay, does that make sense? Drop a 5 in the chat if that makes sense. Perfect. Okay, so again, I'm gonna go ahead and do the same thing with the 5s. Okay, real quick, run through it. I will do something like this, push up, create this pattern where we got a green candle, one little red, green pushes up, price continues going up, comes down, taps in here, and then continues to buy. And our entry is going to be typically the open of the candle. 50% as well, but I like to look for just the open. Okay, and again, our entry is there. So our stop loss is going to be right here, right at the close or the longest wick, right? My bad for not drawing the wick here. Say the wick, something like that. Boom, right? My stop loss is going to be the longest wick of these two pairs right here. Okay, so right here, if I were to sell with my entry right there at the open, boom, my stop loss is at the longest wick. Okay, does that make sense? Do they appear after a breaker structure? Yeah, usually, right? Usually they're in a long like run. Like let's say an impulse where like price, you know, made distribution or whatever up here and price is just dropping and creates this. Typically, this is where you get your LPSYs, right? Price is dropping, comes back up, boom, drop. Okay. So essentially, yeah, they usually happen in a trend. Okay. Does that make sense? Okay. So that's the smart money cube, right? So people are always asking, what's a smart money cube? You know, not many other educators on our group go over that. I like to go over it because to me, it's one of the major things I look for, right? It's essentially an order block on a higher time frame, kind of like hidden in the trend, if that makes sense. Okay. So now this next one, who can tell me what this is called? I like trading these two. Who can tell me what these two types of structure are called? Reversal. I mean, technically these are all, or also the order blocks are reversals, but imbalance is what I was looking for. Perfect. These are imbalances, right? These are how we trade imbalances. Okay. So again, top is a sell example, right? So price is trending. Price is just dropping. Instead of getting a cube, I like to use this little parallel channel where price, let's do this, boom. Sorry, guys. Essentially, boom, between those two wicks is an imbalance. Why is that an imbalance? Well, the reason why is because if price is trending, coming down, price drops, price is pushing down so hard that it leaves what's technically a gap, right? That imbalance, right? And what that means is, if you guys have watched the boot camps, what's the fourth law that James goes over? Or get a drink. Perfect. The law of supply and demand, meaning for every seller, there has to be a buyer. Well, essentially, in a hard impulse move, there's straight selling, right? And usually with these wicks, what it means is, like, if you think about it, right, price dropped to this lowest point, but came back up a little bit, closed right here. You know, price on this candle right here, right? This last red candle that I have, essentially price started right here, pushed up, dropped down to here and then closed right here, right? So essentially what happened is price started pulling back, but it didn't fully pull back to close in this gap right here, right? So essentially, if you think about it, it's like this. Okay. Price dropped. Well, I'm doing all three candles, right? Price dropped, pulled back a little bit, did something like this, pushed through, pulled back, and then dropped, right? It didn't pull back all the way to this point, kind of close this gap, right? It left this opening. Okay, that's what we call an imbalance, okay? Or that's at least one version of an imbalance, okay? So essentially what we want to wait for is kind of like a smart money cube. We want to see price, drop, come back up, but instead of playing the open on an imbalance, you typically play the 50%, right? And the reason why is because not only do the banks like that, but the market algorithm itself needs to close in at least 50% of those imbalances, of those gaps, right? So essentially price pushes up. This is our area of interest. This is where we're looking at for an entry, okay? Sometimes price will come up and close the imbalance, but it's very rarely, okay? And in this case, when we sell, entries at the 50% and stop loss is right here, right at the top of that candle, right? If there's a wick, we'll play the wick, right? So like, let's say the wick ended. Let's just say something looks like this. You guys get the point though, right? So watch. Hold. Cool. So let's just say we play the wick like that. Okay, does that make sense? Drop a 7 in the chat if that makes sense. Perfect. So now for buys, same thing, right? And I drew up a little bit different structure in this case just to show, something similar, right? Let's say price did do this, came down to this, created this structure, something like this, and then from here, price pushed up, okay? Essentially, our imbalance is now between this wick and this wick, okay? And again, the reason why is because it's almost exactly like this, right? Thinking about it as pullbacks, right? Price dropped, pushed up hard, came back, but it didn't fully close, right? Left that little gap there, and then price pushed up. So essentially, our area of interest is here. This is what our setup looks like. In this case, stop loss would be more down here, or you could play this candle, depending on, the size of the risk and stuff like that. And then, this is what our setup would look like, and we'd expect price to do something like this. Okay. Will price play the imbalance on the candle above your POI? Price play the imbalance on the candle above your point of interest. What do you mean? So let's say there's an imbalance here. Are you saying would price play the imbalance on the candle? Is that your question? So on the candle above the middle candle. On the buys, are you talking about? This one right here? The first one. Are you talking about this first imbalance? I'm gonna go ahead and unmute you because just so we can get this. Oh, imbalance section. Okay, so right here. Let's see. So yeah, price is playing the imbalance, right? Not necessarily the candle. I mean, it is, the candle is here, but it's between this wick. Let me get the arrows to show you guys, right? Price is playing the 50% of the imbalance, right? That little dashed line. So essentially, your imbalance is between that. Let me go ahead and draw it like this. That wick and this wick, okay? So price isn't coming back and playing the candle necessarily, it's coming back and playing the imbalance, right? Where price just kind of pushed through and then retraced to here and fully come back and close, it's gonna push up and play there. Does that make sense? Does that answer your question? I'm hoping I understood that correctly. I got that. Okay, perfect. So that's essentially where price would come back and play. Okay. So now, again, so that's the imbalance. Okay. Does everyone understand that? Drop a 9 in the chat if we're good. I don't know what number on. Let's go with 9. Perfect, perfect. Okay, so now I'm gonna go ahead and get into an example right here real quick here on EJ, okay? So not even looking at like the overall trend and stuff like this. Essentially what we see here is equal lows, right? See how price came down and tapped here? This is what I would consider equal lows, okay? Price pushed it up, came back, tapped here, equal lows. Retail traders are looking at this as an area of support. Price pushes up, comes back. What are people doing? Let me go and use a replay real quick. All right, real life example. What are people doing? Actually, let me go back one more candle. What are retail traders doing right here when they see this? They're buying. Perfect, right? Orange line, they just bought. They think they got a sniper entry. They're like, oh yeah, stop loss. Let's just say right here, okay? Boom, they're like, oh yeah, I got a sniper entry. I'm gonna make this green. Perfect. Other people are thinking, okay, I want to sell, which I want to make blue once price breaks through. So this blue line is a buy stop, or excuse me, a sell stop, right? When price breaks through, I want to sell it, okay? So green is where people are buying, blue is where people are putting sell stops, and the red is their stop losses. Let's just say they're in the exact same spot for this example, okay? So essentially what happens is the banks come into play, right? Boom. What's going on is, oh, cool, the buyers are in profit, and then boom, banks come back in. You see how much bigger this candle was compared to pretty much the rest of these, except for this, obviously, this impulse. This is how you know the banks are in play, right? If you use volume, most likely that's going to be a volume spike. Okay, I don't use volume at all, but essentially that's exactly what happens. After this happens, what does price do? Oh, look at that. You see how big that is? Why does that happen? Well, again, going back to the example that I did in the very beginning, the banks essentially sold right here, right, to push the market down. And then immediately afterwards, let's say again, right here, they put in 100 million lots. As soon as they're done, now they put in 900 million lots for buys. And that's why the market, see how big this candle is? That's why the market exploded up, okay? And we let it play out. Let's explain, and shot up, okay? Now, looking at this, let me go ahead and go to higher time frame. Yeah, I don't think it has. That's why I wanted to go over this. Okay, cool. Perfect. So looking at this, sometimes, now this is very rarely, and this is why I personally don't teach it, is sometimes this right here, where these wicks touch this wick, right? See how price pulled back to the wick? Sometimes it can play the wick of the candle. However, instead of playing like, or excuse me, sometimes price will come back and play the wick of this order block, right? So our order block is right here, okay? This rarely happens. And the reason it happens is usually it's a higher time frame order block, meaning the open of the candle is probably up here. However, that's what I kind of went back. That doesn't look like to be the case. To me, this wasn't a deep enough pullback. So right now, I'm still waiting for price to come and mitigate this candle, okay? Let me make this green, okay? But essentially what happened was the banks dropped, took out the buyers, activated the sellers, and then came back and took out the sellers, okay? Does that make sense? Drop 1 in the chat if that makes sense. So essentially, if most retail traders adopt smart money concepts, the banks will come up with another strategy to confuse retail traders to make money. So, I mean, essentially, yes, but Not really. And the reason why is because, again, this is your typical smart money example where this looks beautiful and we're like, essentially we're catching on, we're trading this. However, you got to think of smart money as a concept, okay? Because also, this is where the banks capture money, okay? In another class where I'll go more into liquidity, this isn't the only way the banks are moving towards liquidity, right? This is just the typical smart money concept where they want to capture liquidity and then price move up, right? This is why retail traders don't succeed because like this, right? So again, smart money isn't just like a strategy. It's a concept, meaning if I was a bank right now and I know people are trying to buy right here and I need to take them out to make money, what am I going to do? Right? So you got to think about it like this, okay? And I know this call's been kind of long. I'll kind of shorten it up here soon so we can get off. I don't want to keep you guys too long. But essentially, like, okay, if price is live right here, okay, and let's say you had the ability to trade for a bank, okay, and your job is to follow economics, like the world, right? Understand exactly what's going on, right? Like you can't just, move the market in any way you want to because it'll screw up the economy. Okay, so essentially that's why trends are important because like EJ's been uptrending. You can't just necessarily just drop EJ off the face of the earth, right? You got to continue the trend. This is why trends exist along with cycles, but we'll get into that another class. But essentially, you got to continue this uptrend. However, you can't just continue to buy right here because if you buy right here, all these other retail traders are making money, and that's taking money out of your pocket. Okay, or not necessarily taking money out of your pocket, but it's taking money away from you to win. So essentially, instead of buying right here, what you're going to do is you're going to try to build up as many orders as possible, right? You're going to accumulate as many orders, meaning you're going to start showing that, hey, we're in profit. Late people are seeing this. They're like, okay, now I got to buy. They're just going to buy, right? And it's just building up people that are buying, or also putting those sell stops. And then you come down, right? Again, thinking as you're trading for the bank, you have the capital to do this. You're like, okay, I'm going to come down and take out those buyers. Boom. I just did that. And now that I did, now I'm like, all right, cool. I came down, I dropped the market, took out those buyers, and I made, like, I don't know, let's say, I don't even know, $3 billion. I don't know. Let's just say, and that's, what you needed to make that day. You're like, cool. So now I can move the market in the correct direction now. Boom. Okay. Does that make sense? It's like fishing with a tasty lure. Perfect, right? One of my mentors actually had that analogy where it's like fishing with a net. Essentially, what you're going to do is you have a net, you're waiting, you're looking at the pond. As soon as you see a fish, you're going to dive in, capture it, and pull out right back, real quick, right? Banks dropped, put their net in, captured it, and took it out right away, right? Perfect, right? Exactly, right? It's a concept, guys, where prices they're going to capture those retail traders and then continue the market in the way that it needs to go, right? And now they need to come back and mitigate this. So personally, I'm looking at for EJ to come and tap this, okay? However, we also have crazy imbalance down here, right? So if I go to like the 4-hour, this essentially looks like distribution to me, which we'll get into. But basically what I want to see price do is something like this. Boom, 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 right? And why do I want to see that? Well, one, they need to mitigate those buys, right? Or excuse me, those sells that are in drawdown, okay? They need to come, mitigate that, and most likely push price up. But essentially, I also see some equal highs sitting right here, right below another order block. Does that make sense? So essentially what I see is that price, and if we look at it like this, let me move that up just a little bit. These are essentially equal highs that got taken out, right? And again, this is distribution. If you guys don't know, that's, Wyckoff, which is a version of a subsection of smart money, if you will, right? Where price pushes up, comes down. Now price needs to come up, mitigate that, and continue down. So essentially, it's just smart money moves back and forth, okay? Does that make sense? Drop a 3 in the chat that makes sense. I don't want to go too, off topic, but essentially this is what I'm predicting to happen on EJ. And actually down to this green line. I know that rushed a little bit off. Okay, perfect, okay. And so other than that, guys, that's pretty much what I kind of wanted to go over with smart money concepts. But as I said in the announcements, I want to go over gold real quick. So feel free. I mean, essentially, this is a smart money move. If you guys want to stay on and continue watching this, but if you guys want to hop off, completely understandable. We've been on for a long time, right? So I appreciate you guys hopping on. If you guys don't mind, shout me out on Instagram, shout out Empire. I'm gonna go to drop those in the chat. But I am gonna go over this example if you want to check this out and why I marked this up. So let me go ahead and drop the Instagrams. Cool. Shout us out if you guys don't mind. Let's try to grow the group as many as we can. Right. Our goal is 2,100 people within the next or by the end of the year. Right. For the next 2 weeks. Okay. So essentially, though, what happened here was I was looking at gold, and obviously we're uptrending. Okay. We always want to go with the trend. Okay. And first and foremost, I can already tell this was a smart money move. Right. We see that price essentially made relatively equal lows, meaning that this wick came down, this area came down, this came down, this came down, right? They're all in the relatively same area. Price comes down one more time, quick little wick, captures that liquidity sitting there, and then price pushes up. They came down, look, immediately pushed up, mitigated, and the price continued up. That's a perfect smart money example, okay? But that's not the move I wanted to go over. It's right here, right, what I was looking at, okay? So I saw that price was pushing up. This long wick is catching my eye. Okay, so if I go down to the 30-minute where I saw that perfect order block, boom. Why is it perfect? We see relatively equal lows with these wicks, and obviously, within this past area, we see some more equal lows. Right? To me, this is just showing that, hey, there's money sitting right here. Price pushed up, pushed down really hard, captured that, and then shot up immediately. Okay, so I marked this up yesterday on Structured Sunday. And essentially, I said I wanted to see price come down, which someone again asked. This is that break of structure. That's that liquidity grab where they came down, they mitigated that area, tapped that order block, and shot up. Okay. Does that make sense to everybody? That's exactly why I marked up this gold, right? But you see the order block, right? The institutional candle. Price dropped, shot up. Okay. And I also said great confluence on gold, right? 30-minute order block. And lines up with the 0.786 level, right? So whoever asked for fib levels, at first I had it marked up here. Let's actually move it to where I would have marked it, right? From swing low to swing high, okay? Looking at this, it sits right in my pocket, okay? If you guys don't know, which I'm actually gonna make a video on this probably tonight about my fib levels, that's my ideal fib setting. That's where I wanna see price pull back to within this area, okay? Why? Because 786, which we'll go over in another class, is known as the optimal trade entry. That's like the perfect area, the most consistent area where the banks like to pull back to based off the theory of extremes. But also the 886 is also a great area. Okay. Again, I'm not gonna go too deep into that. That will be gone over another class. But essentially, this is why the fib is important. Okay. These two areas is a great confluence, right? Great confirmation that price needs to pull back here. Okay. But we're not gonna use the fib alone. We want to look for those order blocks. Okay. So price pulled back down to here, mitigated, and now price is pushing up. And I do expect price to push up long term into this higher time frame imbalance. But essentially, guys, dang, this was actually a 700 pip move. I'm kind of upset that I'm not in this. But we'll see if price maybe comes down one more time before moving up. Okay. But does that make sense of why I marked this up? Or could you go on lower time frames and see what the long wick looks like? Exactly. Perfect. It hit the open, not the 50% of the OB. Yeah, exactly. That's why I personally play the open. Sometimes I miss the 50%. But to answer the question about the wick, that's what's known as a liquidity void. A liquidity void is essentially a long wick on a high time frame, but an order block a small time frame. Right. So let me go back to the hour. Right. That's exactly what I noticed with this area. Right. This is a long wick. Looking at this, I'm like, okay, if I go to a smaller time frame, I'm most likely going to see candles. Go to the 30. What do we see? Order block. Okay. This wick here. This one may have not been. Cool. So essentially, in this case, this would not have been a liquidity. Actually, there we go. It's a candle on the 1 minute. Perfect drop. Tap here, shot up. Now, essentially, though, I don't know if I would call this liquidity void because I can't go any lower time frames. Right. I personally don't have the second time frames, but this is essentially showing you that it's not necessarily an order block of capturing liquidity, it's the mitigation candle, meaning that price doesn't necessarily need to come and play it again, but it is a possibility. But essentially, this is where price had to drop to tap that order block and mitigate before moving up. Saw the same move on gold, didn't take it. It was sick. I know, man. I had this marked up. I don't know why I took my eyes off this. I don't even remember my alert going off. I don't even know if I set one, to be honest. I thought I did at the 7-1, but essentially, guys, real quick, one more time, does that make sense of why this happened? Go ahead and drop a 5 in the chat, if that makes sense. What's exposed liquidity? I'll go over that in another class. I don't want to keep you guys too long, but essentially, it's a long wick, which we'll get into. You would have had 2 minutes to respond. Oh, yeah, to that move, yeah, that was a quick move, okay? Yeah, and the reason I was being patient, because if I would have set a sell limit, that's 100 pip stop. I was not about that. That's way too big. So I would have been patient for that, and I would have waited. But essentially, yeah, that was a quick one. Same thing as this one. Okay. All right, guys. So I appreciate it. I don't want to keep that too long. Exposed liquidity. I'm assuming James may go over that on Wednesday. I can't promise that, though. But there are videos on it, especially on the boot camps and stuff. But other than that, guys, I appreciate you guys hopping on. Any other questions, feel free to message me privately on Discord or Instagram. You guys have my Instagram. I'll go ahead and drop it in here one more time. Perfect. So I appreciate you guys. Thank you guys for hopping on. And the recording will be posted very soon. Thank you, guys. Y'all have a great night. Happy holidays.